Good morning, everybody, and welcome to the Siler Wealth Management video blog. Today is Thursday, April 28th, and yes, I have not done a video in the last week, and because we were really working diligently on the website, which is silerwealth.com or stockdr.com. That's stockdr.com. Two different web addresses go to one place, and there's so much content on this website. I'm really pleased, and if you go to the bottom, you'll see a lot of presentations, you'll see a lot of articles on virtually any topic you need. If you're looking for the right retirement plan for your business, it's there. If you're looking for, we hear now that Prince did not have a will. It talks about that. In fact, we have a white paper on that on my Facebook, on the Siler Wealth Management Facebook. So there's a lot of great articles. I encourage you to look at the tabs, go to the bottom. There's presentations on retirement planning. There's a lot of really exceptional things. Great resource. So it's stockdr.com, silerwealth.com. Check it out. Now, what I want to talk about, because, the markets, I hear a lot of people predicting things, okay? And first of all, market predictions are almost impossible because you may think you know it. And even though we get lucky and we sell things at the right time and buy things at the right time, I mean, it's difficult to do. You're never going to buy at the very low, never going to sell at the very high, okay? What you have to try and do is try and have more winners than losers and prevent your losers from being disastrous. That's really the bottom line. If you have a loser that's down 60%, it's hard to recover from. And you really never know what causes stocks to go up, although it's supposed to be earnings. But I'm going to give you something here. This is what I call them. This is some things I put together. These are things that make you go, okay? Coca-Cola is fighting 12 consecutive years of soda consumption decline, but its stock is at all-time highs. Tesla supposedly is changing the world, and the orders for their new car that they just are coming out with in 2017 are off the charts. Tons of orders. But yet, the stock is lower than it was 18 months ago. Cigarette consumption has dropped 44% since 1981. Good for you. Altria is up 71,000% since 1981. Walmart, their net income has tripled since 2000. However, its stock is still down 1.5% from 2000, from 16 years ago. Apple has earned almost $250 billion in profit since 2012, but their stock hasn't budged that much since 2012. Amazon profits have basically been zero profit for the most part since 2012, yet its stock has tripled. In 2009 was one of the worst years in the economy in the century, yet the market rose 27%. 2015 was a good year for the economy, yet the market was flat. Brazil's economy is an absolute disaster, huge disaster, yet its stock market is flat over the last 2 years. And lastly, America is enjoying the longest streak of low unemployment claims in 4 decades. Yet, the stock market is flat over the last 2 years. So what that tells you is things could be news-driven, but you have to look at the long-term trends of your investments. Are they working? Are they not working? And that's what we kind of do. We kind of look at everything. We want to look at the fundamentals, make sure we're buying really good companies or buying good investments, but we want to make sure that we believe that the trend is going to be up. And look, nobody's always right, okay? We're right a lot more than we're wrong, but you just never know, okay? You want to make sure that those trends are going in the right direction. Now, let's talk about why the market's a little bit stagnating here. And, I believe that we're in for a little bit of a pullback, and I've said that we're just hovering. We can't really get above certain levels, but let's talk about earnings. Earnings have come in. Most earnings have beat expectations. When I say most, like 70%, it's about average. But what's the problem lies is the important stocks. Those FAANG stocks, or I like to call them the FAANG stocks, because I add Apple in there. And remember, the original FAANG stocks, Facebook, Amazon, Netflix, Google, but I'm adding Apple in there as FAA, so let's call it FAANG. Okay, not the Asian FAANG, but FAANG. So Facebook came out with earnings yesterday. They blew it out, knocked the cover off the ball. Stock is trading up after hours. It has been absolutely a laggard the last month. The stock has not been acting well. Big surprise. I think since everything else has been doing poorly, they thought Facebook and everybody, including myself, thought Facebook wouldn't do as well earnings-wise. We'll see how it trades today, but certainly up nicely after hours. We do not own Facebook. We sold that about 3 weeks ago. Amazon has been under pressure a little bit lately. They report earnings after the close. We'll see how they do. But again, it doesn't seem like Amazon really has to make any money for their stock to go up. So we'll check that out. Let's talk about Apple. Apple reported earnings this week. They missed on earnings and revenue. Their guidance was not fantastic, although they still seem optimistic about a lot of things. They are bringing more money, giving more money to the shareholders in the form of dividends, so they're raising their dividends. So they're doing the right things. I think Apple's now moved from a growth opportunity to probably a value stock. It still trades very cheaply, and at these levels, probably an opportunity. I don't like to buy stocks on gap downs, and a gap down is when stock closes at 107 and opens the next day at 98. I don't like buying on gap downs because what happens is the initial rush to sell usually is not done that first day. You usually take a day or two to just cycle through. So we'll keep an eye on that. Netflix, part of the FAANG stocks, disappointing earnings. That stock got hammered. Google, disappointing earnings. That stock got hammered. So of the FAANG stocks, Facebook's the only one right now. Of course, Amazon reports after the close today. We'll be watching that closely. But they have not been performing well. But you know what has? The energy sector has done phenomenally well. Energy stocks are doing incredible. I'm looking to see if ConocoPhillips, the stock I own, they came out and they lost money. And this is how desperate the energy sector is to move their stock prices up. They were supposed to lose $1.05 a share. Guess what? They lost 95 cents a share. So that's better. That's a beat on lack thereof earnings. But the energy sector is doing great. That's one of my favorite sectors right now. And it's really, luckily, we were overweight in it this year. That's what's helping our performance this year. We're overweight in energy. We're overweight in healthcare, which is starting to get very frisky now, like in healthcare here. The banks are still in quicksand. I mean, they're not really going down. They're hovering. But I think that at some point, they're going to go up. Janet Yellen said, basically, if you read between the lines, there's going to be a rate hike in June at the June meeting, 25 basis points, very much expected. So we're probably going to get the 2 rate hikes this year, which is a little better than originally expected, which was 3 to 4. So that being said, I want everybody to check out the website, stockdr.com, silowealth.com. A lot of great information, I'm telling you. And also on our Facebook, Silo Wealth. And I'll give some cruises next week, just haven't had a chance to put it together. Please share my video. If you share my video or like it, we'll enter you for a drawing for the cruises for 2 for the Bahamas. And it's awesome. It's really a great weekend getaway. In the meantime, we do take appointments, and we are going to take them for the next few weeks on Tuesdays and Thursdays. If there's an exception, you need another day, we can fit that in. But Tuesdays and Thursdays. And that's all I have to say today. The market is indicating a much lower opening. The Dow down about 130. The NASDAQ looks like it's going to be down about 3 or 4. Facebook certainly helping that. And the S&P down a little bit. So looks like we're going to be a little bit on the defensive today. Let's see what happens. I think everyone should be on the defensive right now. You know, there is an old adage, sell in May and go away. I'm not saying that's going to happen, but let's try and be a little bit more cautious. That's what I'm doing for my clients. I'm Lee Seiler, also known as the Stock Doctor, stockdr.com, Silo Wealth. Share this video, please. Share, like, and then we'll get that good information out there. All right, thank you very much. Have a great day.